Hello, everybody. How we doing? This is 50 pips rocking and rolling again. Second update of the day, 3rd of July, 2015. As usual, no trade calls or recommendations. Every response for their own stuff, and the fact that you're in here means you've read, you understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some live tech analysis in a learning context for educational purposes only. Okay, guys, what's going on? Second update of the day. So, again, we'll see how far we get through the marathon. The big question is, how long is my voice going to last? Well, we'll have to see, right? We'll take it, we'll play it by ear, and we'll see what's happening. So, we had some UK data out. Again, I don't think it's a particularly interesting day today. What did we say on cable, right? As usual, we go back to what we said. And what we discussed on cable was that basically the day was a bit choppy. But if anything, we would expect this hold here to try and see a rotation back up into these highs. If this is holding, and it looks like it's trying to rotate. So, if anything, even those scalps back this morning for yesterday's highs range, that's about a 30 pip move. Got that into the into the data release. Again, just to be clear, I'm not trading cable today. But you see that it looks like we're getting that, we're getting that rotation in play. It's attempting, and the move is in play. So what to look for right here, right now, for the rest of the day? Well, you would expect, with the underlying theme that this hold would signify some kind of a short-term, at least, basing process, if not an extension move back up into these highs, maybe channel high. Right here, you have to deal with the previous day range, right? And what the previous day range is likely to do is that yesterday's highs, which we're testing here, is likely going to be pivotal for Momo and flows, as we usually say on Twitter. So it's good because we have these discussions here live, so I can explain what we talk about in more detail with some clear examples. So what do we mean when you see me tweet, this level is pivotal for Momo and flows? That's what it is. Cable is stuck, is struggling, is looking for direction at yesterday's range, and it's trying to press that high. So you'd expect to see some kind of engagement here. And why is yesterday's high so important? Because it will likely be pivotal for momentum and flows coming in to defend or to press the break. So as long as price can hold below yesterday's highs, you would expect the longs to give up, the short-term players to give up a bit of choppy action, so price to just stay contained inside yesterday's range and possibly just make its way back into the mid-range or the lows of the day. However, should price manage to get above those yesterday's highs, tripping some stops, triggering some buy stops, attracting some new buyers at highs, then most likely it will get some legs and it will try and make a run back up higher to that next level. That's what's going on. Now, it's tricky to really discuss and go through these things in this kind of market because it's a very choppy market. It's a bit of a dead market. Does that make sense? Do we have any comments, any questions on that? Now, again, if you just got in, we've got the recording. The link is up on YouTube. The link is up on the blog. We reviewed a bunch of charts this morning earlier on. And right here, the market is just kind of chopping around. So what I wanted to do here, it will probably be two separate updates. But basically here, in terms of this first update, I'm going to go through some of the Q&As, right? Some of the questions I've been getting. So we'll try and break them out into two different sessions so the recording isn't that long so it can load quickly. But, basically it's part of the, Ask 50 kind of segment, right? And, a lot of people asking me about trading and fitness, right? I think, trading and fitness, whether you're trading, whether you're doing any kind of job, I would just make more of a blank statement, right? Just as long as you're alive, right, it makes sense to be fit, right? So being fit, it just makes a lot, you're going to be healthier, you're going to be more focused, you're going to be able to deal with stress, etc., 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 much better. And especially with trading, because trading tends to be fairly sedentary kind of action. You're sitting down all day in front of your screens, it could get really bad. It's not I lost you guys? What's happening? Test, 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 test. Test, 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 test. What's going on? Looks like we're having some kind of connection issue here on Adobe. Don't know if it's going to load or if it's still recording, or we're going to have to reboot the room maybe. Okay. It looks like the Adobe doesn't like having the others, the Snagit recording on at the same time. Yeah, it's a bit unfortunate. Are we on? Are we on? Are we on? Are we on? I'm not sure. Let me see if I can do something. Okay. I think it's the Firefox actually messing with it. I'm going to just try and shut down my browser. Okay, looks like we're back up, right? No interruptions at all. Okay, it's just on my side. It just looks like it's the Firefox was playing with it, so I just shut down all my browser. Okay, so what was I saying? I forgot what I was saying. So basically, yeah, in terms of trading is fairly, sedentary kind of action. So, if you don't try and keep fit, what you'll see is over time, spending hours in front of your screen is you're going to start to have, back pain. You're going to start to have elbow pain. You're going to have to wrist pain, all kinds of stuff. And then everybody's going to start to say, oh, it's because of the mouse, it's because of the chair. I think broadly speaking, it's because you have to move, right? As individuals, we're not made to be in a sitting position all day, and we're not made to just be sitting down doing nothing. So, one of the ways I like to solve that, apart from, of course, being fit, is having a standing desk, right? Now, that doesn't mean that you have to stand all day. You can get a stool or something like that just to sit down now and again. But I think even if you're sitting on a high stool, it's a much better position. And the fact that you should slowly start to, stand as much as you can will mean that you'll, globally speaking, be a lot more awake, right? You'll probably be a lot more awake, a lot more ready for action. So I think that's a pretty important point overall, right? Yeah, a lot of people also asking here, every time we get on, people asking, do you have a Bloomberg terminal? Do you think it makes sense to subscribe to a Bloomberg terminal? Well, I don't think it makes a lot of sense to subscribe to a Bloomberg terminal if you're just a day trader, right? Or if you're just trading. Yeah, there's just not a lot. There's no real need, right? It's different if you're going to have to be in contact with a lot of people, or you're trying to do fundamental analysis, especially on companies, or you're trying to do more sophisticated kind of analysis. But I definitely don't think it's a prerequisite to be profitable, and I don't think it's something necessary at all for somebody who's just a private retail trader, right? On top of it, you've got to think about all the lock-ins and everything, and you're talking about $2.5 grand a month. So you'd have to clear that just to get through that expense. So I just don't think it makes sense. I think a lot of people want to have one, or they think they want to have one because it's cool because they think it means that you're a professional, or whatever that means. But if you're a junior trader or a retail trader, I just think just forget it, right? Just forget it. There's no, just drop it, right? There's no need. It can be useful for a lot of things, but I think it's overkill for 99.9% of the people, right? The whole point is about charts is, 1 minute versus 5 minutes versus 15 versus dailies, is that what I would strongly suggest is to try and understand how the market moves, try to understand what the market is doing or how the market tends to behave. Even before that, just put yourself in a condition to understand what the business is all about. So what the basics are in terms of pips, etc., leverage, what leverage means, etc., etc. But then you want to focus on the basics. How does price react around support or resistance? How does price react from one session to the other? How do flows tend to move during the week? How do flows trend to move on a new week open? How do flows, or how does the market tend to react into quarter end? How does the market react to certain kind of news events? What kind of conditions mean that the market is going to be more active, less active? What kind of market is going to be more interesting to trade in terms of a range trade or not? Once you get, understand all those things, and those things you can understand them on any single chart, on any single time frame, right? Because if you just it's just a smaller or longer snapshot in time of what price is doing, but price will be doing exactly the same thing, right? So the only difference is that, hey, David, some people will prefer one time frame rather to the other. But as a general rule, if you're we always talk about squirrel on crack, right? But if you're trying to learn how price tends to move around support or resistance and all the things we just said, right? Debbie, yes, subscribe to price action. Is it's going to be much harder to learn it on a 1 minute rather than on a daily. Why? Well, because the 1 minute just moves so much quicker, right? It doesn't mean that what the price is doing is different, but it just moves so much quicker. So it'll be much harder. So, as a general rule, if you're trying to internalize, if you're trying to understand, it's probably better to start to look at some of the higher time frames. I wouldn't go to a monthly or weekly, but daily, 4 hour, 1 hour. I think it makes a bit more sense. Then if you want to drop down to another time frame from the trading, that's separate. But before you hone or you fine tune the trading, you have to understand what's going. Hey Troy, how's it going? What's happening and how things are trading. So the time frame, don't get too too bogged down with that, but remember that things will it's the same things tend to play out. It's just, the shorter the time frame, probably the less reliable the signal, but maybe, the risk reward will be tighter. But again, it really depends. And, a lot of questions, again, also this goes into all the questions, or should I scalp, should I swing? You have to find whatever works for you based on your account size, based on your risk profile, based on your situation, when you can trade, when you can't trade, right? You have to understand, one of the biggest lies, or not lies, but things that the industry trends to perpetuate, it's, the classical open Forex market, open 24/5, whatever, you can trade whenever you want. Well, the reality is you can't really, well, you can trade whenever you want, but there's not an awful lot of edge 24/5. There's specific times that make more sense to trade. There's specific times that tend to be more favorable for certain kinds of setups. So to all those questions, what setup should I take? How much size should I trade? What leverage should I use? It's always the real responsible answer is always, it depends, right? It depends what you're trying to do. It depends the bigger context. What might be right in one context may not be right in the other, right? So again, that it really depends on a lot of things, and all those questions on account size, etc. I think a lot of people get obsessed about account size, about numbers, and a lot of people out there on the internet, they always get obsessed with profitable traders or superstar traders, and you see a lot of guys trying to talk about the size they trade or how much money they make. Even if they don't implicitly do it, they kind of sneak that in, just kind of on the side, how much I made, 10 grand, 20 grand, whatever, and the size of the account. In general, I would run quickly from those kind of people, because there's no point talking about size or something unless you're trying to impress anybody, right? And chances are, if you're trying to impress anybody, you're not really trading that big, or you're not really making that much money. Okay, if you're trading big or you're trading money, the last thing you want to do is try and impress somebody you don't know on a blog or in an interview, right? You couldn't care less. So the point is, don't. And then also people talk about successful, not successful. They try to relate that to how big you trade, how much money you trade, right? What I would say is try and be responsible about it and change the conversation, completely shift gears. And instead of talking about that, talk about the actual returns on your investment, on what you're trying to do, right? What's the only thing that's really important if you're trying to trade? The only thing that is important is that, number one, you're not hemorrhaging money, right? Because there's no point continuing to trade if you're just, unless you want to finance a gambling habit, it's okay. Some people know that they keep on buying lottery tickets. Okay, well, probably not going to happen, but who knows? It's okay, but you don't want to, that's not the point as far as I understand of trading or trying to trade for a living, right? Is to be net profitable, right? To find something that works, right? And how do you find what works? That's not defined only by looking at how many pips you make. It's not defined only about what your percentage win rate or whatever. It's defined on, are you profitable on your investment, right? Are you on net balance profitable? So that's your focus. You should be focused on, at the end of the whatever you're looking at, at the month, day, year, but from a yearly basis, you need to be up money at the end of the year. If not, it doesn't make a lot of sense, right? So how much money is not really important at all. A lot of people are going to say, oh, that's not true. Well, follow the discussion for a second. What's important is what percent you're up on your account size on your investment. Or then you could take it a step further and say how much risk you took, et cetera, et cetera. But to start with, what is important is, how much you made, right? Because at the end of the day, right, you're going to sit on two people, just take two examples, right? Somebody is up, yeah, exactly. Hold on, just go with me on this, on this for a second, right? Somebody's going to tell you, I made 10 grand this month, right? And everybody's going to think, oh, that's good. He made 10 grand this month. Is good. And the other guy's going to go, hey, how about you? I made $10 this month, right? Okay. Oh, well, that's not a lot. Okay, whatever. But really, so the natural tendency is for people to think that the guy who made 10 grand is a successful trader and the guy who made $10 is a loser, right? But if the guy who made $10 is trading a $1,000 account, right? And the guy making 10 grand is trading a 1 million account, they're both up the same percentage, right? Maybe the guy who made 10K is trading a 10 million account. So what's the real definition of success? What's the real definition of a good trader? Why do people always put it down to how much you made, the money? Because people are trying to impress people, their ego. The discussion is completely misplaced. What is important is how much you're making on how much on your account, right? Your investment. That makes sense. So, right, for somebody who's making, and we're always talking about it in a conservative kind of risk profile, but somebody who's making $10 on that 1,000 account, 1% a month regularly, he's making 12% a year. That guy's a lot more successful than a guy who can make 100 grand in a year, but he was trading, hundreds of millions, right? So, and then the beauty of it is that once you know that you are solid, once you're on net balance profitable and profitable with a conservative or reliable risk profile, you've got something very beautiful and very interesting, which is a double-edged sword in trading, right? And here comes, at this point, open the doors. Could somebody give me a drum roll, please? Enter leverage, right? There enters leverage into the equation. Now, all of a sudden, because of the fact that we can trade with leverage, you can scale your account to make sure that whatever you know you can make consistently in a responsible fashion means something for you. Okay? Now, nobody is debating the fact that it's much easier to trade for a living if you're trading a 100K account than if you're trading a 10K account. Nobody's debating it's much easier if you're trading a 1 million account versus a $1,000 account. That's beside the point, right? Then it's just a question of being underfunded, right? Undercapitalized. But what you should focus on, first of all, is being profitable and having a manage your risk and have something which gives you the opportunity to find the capital you need to adjust the leverage to a point at which it's going to make sense for you to trade. Then again, you know, what is a healthy percentage return on your account? How much should you be making? That depends on a gazillion things, right? Somebody living in I don't know, in a rural countryside anywhere is probably not going to need the same kind of cash somebody who has, as we like to say, 4x wives and living in a penthouse in Manhattan, right? So again, you always have to be very careful about comparing apples with apples. And the sad thing is that because of everybody's trying to sell this dream of trading, etc., nobody's really comparing apples with apples, right? And the reality is that, hey Dan, and the reality is that when we're talking about what are realistic returns, the first thing most people, apart from the complete jokers, which are going to talk about 100% a month, right, or 100% a week, you know, most people think it's going to be easy to make something like, let's just be broad, 20% a month on your account. What you have to understand that if you're trying to trade in a responsible manner, what's a lot more realistic, instead of that 20-30% a month, it's more like 20-30% a year, right? Then whether that is enough for you based on your account size to live off, that's not a problem of what's realistic or not. That's a problem of how much capital you have to trade. Now, of course, remember, there's no risk without reward. And everything is, everything has a way to mix up, to come back and gel. So of course you can shoot for a much higher percentage return a month, but then you're going to have to accept much higher percentage risk, right? And possible drawdowns. And then it's difficult because you might be very aggressive on one account, very conservative on the other. You know, everybody's different, but at least I hope that tries to, that frames the situation a bit more. Debbie, can you, by any chance, do you know how long we've been going with this recording? So, you know, I think that's another interesting thing to keep in mind. Yeah, I mean, the debate of futures versus Forex, that's an interesting one, and it depends on a lot of things, right? Because, you know, bottom line, you can get a lot more flexible commissions on the future side, especially if you're trading bigger size. So it can easily end up being a lot more cost effective than Forex. The good things on the future side is that you've got a centralized exchange, et cetera, et cetera. You've got the volume data you can need, et cetera. The problem is you've got a lot more flexibility, right? Because there's only certain pairs, few pairs that have decent volume. If you want to trade some pairs that are not listed, you're going to have to build that exposure through some kinds of pairs trades, et cetera, et cetera. The other thing is that on the spot Forex, you can get a lot smaller in terms of size, which is difficult on the future side unless you try and trade those, what I think they're called micros now, those micro contracts, but really the volume on those is really not that exceptional. So I think if you're a bigger size trader trading a bigger account, it could definitely make sense. But for people trading smaller accounts, it doesn't really make that much sense because of the overall cost structure, etc. Right? Let me see. Let's see some other questions. Yeah, that's a good idea. Do you ever get frustrated or bored? I mean, this week was really boring, right? This week was extremely boring. I mean, from an intellectual side, it was far from being boring because a lot of stuff has been happening, right? A lot of stuff is going on. But from an actual trading side, it's it's been boring because there's not an awful lot to do, right? And what's tricky with those, it's normal to get frustrated, to get bored, to get excited, whatever. I think the key is to try and check those emotions when the trading is involved and try and be as neutral, as unbiased as possible. And what we always say is that essentially it's always the same movie playing out. You just got it slightly different parts and different endings. And the key is to dealing with that frustration or whatever is the key is understanding the context, right? Because once you understand the context, what that does is that puts you to mind shift, right? To puts you in a situation to be able to know what to expect. So if you know what to expect, it's a lot easier to deal with it no matter what the consequences are. You know, when you think you're ill and you have no idea what it is, you're going to think all kinds of weird stuff. You know, then even if it's serious, at least you're much better prepared to deal with stuff once you know what it's going to be, right? So it's the same thing in trading is if you're going into a day after you've had a huge move like that gap up or a huge move like we've seen in Aussie or Kiwi after central bank statements or something like that, or non-farm payrolls, if you go after a big day when we put in a very big day, big range, and you go in and you miss the move the previous day and you go in gung-ho after you've had your 25 Red Bulls ready to rock and roll, right? And you're, okay, man, I'm going to trade. This is going to move just as big as yesterday. Let me catch the breakout. You're setting yourself up to get to be disappointed because most likely price will stay in range, right? If you're going into a week like these past weeks on Euro and you understand that most likely price will be in range, that price will be choppy and there's not going to be a lot of edge, not a lot of trading opportunities, all of a sudden it doesn't make it less boring, but it makes it much easier to deal with that because you already know what to expect. You're ready for something different, but you know, you always use that 80-20 frame of mind to give your, 80% of the time this is likely to happen. And once you know that, right, you put yourself in a condition to succeed, right? If you start to try and trade the news in low liquidity, and you don't understand that there's a very good chance that your stops will get taken out with a widening of the bid ask or you might get slipped. All of a sudden, when that happens, you get annoyed, right? However, if you decide to trade, even though you know that's a possibility, once that happens, it's not that you're happy about it, but you know it was a possibility. You made a conscious decision to take that risk on board and then you just deal with it, right? So as everything, knowing what to expect and understanding the context just makes things a lot easier to deal with, right? Now again, and going back, David, we talked about that earlier, so you could probably catch the recording, but you have to find what makes sense to you for the trading time frames. I'm in front of the screens most of the time, so I'll trade predominantly intraday, right? But there's no right or wrong, right? And that's the other thing. It's normal that you may be interested in what somebody else is doing, right? But just always, like today's webinars and stuff, whatever I say doesn't necessarily have to be true, right? Or you don't necessarily have to have the same opinions on me on look at the market the same way I look at the market. Hopefully what the discussion can do is it can help you to frame some things and hopefully just make you think about things. Then whether you end up thinking your thoughts confirm what I've said, or not, it doesn't matter. The important thing is you think, right? So don't necessarily try, if somebody who has a bit more experience than you tells you something, you don't have to do exactly what those people do, right? Is try and understand the best way of doing things for you, right? So just because I trade intraday, it doesn't mean you should trade intraday, or just because I prefer swings, it doesn't mean that you should prefer swings, and that's kind of like the way we approach the weekly webinars and all the live stuff is, you know, if anybody asks me, hey, what position are you in, what trade you're taking, you know, there's no problem. We'll go through my trade, we'll talk through my position, but I'm never going to look at the situation saying, you know, this is what you have to do, this is how to trade it. We look at something and there's always two sides to every story, right? This is how you would trade it if you're looking for a scalp. This is what you should likely do if you're waiting to be position yourself for a swing. Then everybody has to decide what the best way to take advantage of that is for you, your account, your requirements, right? The implementation can be very different, right? So again, you know, I trade mainly intraday because I'm in front of those charts all day. If I couldn't be in front of the charts all day, I wouldn't even bother to try and trade intraday off, but that's just me. I wouldn't even bother trying to trade intraday off a mobile or a tablet or whatever. I'd be more of a position day trader towards the end of the day, right? Just no, for me, the way I'm wired, there's no edge trying to trade or try to do something on a mobile device, right? But again, there's some people who trade intraday from an iPhone throughout the day and it works for them. There's, right? Okay. Any other comments, any other questions quickly? What I'm going to do is I'm going to wrap this one up here. And I've got about another 10 questions or so. Maybe we can take a break for about 10, 15 minutes, 30 minutes, maybe max. And I'll save my voice. I'll have another cup of tea or something, and then we'll come back and do another one. And if anything moves, you know, we're ready to rock and roll on to look at some charts. Or if anybody has any swing trade, anything they're focused on, just shoot it in the comment box. I'll get to it sooner or later. Okay.